Hello Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. Well, it's the last day of the week, last trading day of the week, last day of the month, and it's time to look at the monthly charts. It's important to see the big picture. Sometimes everybody gets caught up in the minutiae of day trading and intraday trades and everything else and the things like that, but the reality is where are we closing for the month? So we thought we'd take a look at Amazon. This is a chart of Amazon going back to 2014. You can see it's had a nice run up. That's the last signal right there on the January 30th. 341.26 was a monthly trend change going up, and you can see it's had a nice effect here. But look what's happened now. The previous month, December, that was a doji month, meaning the market opened and closed at the same, approximately the same price. So there's actually a gain of about 1.56% for the month. But this month we're down quite a lot. We're actually down 13.93% for the month in Amazon, and this is the lowest close we have seen in Amazon in 1, 2, 3 months. That's a pretty big deal. I think what we want to look at is Amazon consolidating. We still like the longer term trend in Amazon, but we think it's going to consolidate and become more of a two-way market. Our trade analysts are suggesting being out of the market, which we suggested going into the earnings report, not take a position because we knew it would be volatile and the odds just weren't in your favor. So here we are, we're looking at the RSI now. If we get back down to the 50 line like we did here, if we get a little bit sideways action like this, that's when we should start be looking at Amazon for the longer term. Because it is a good stock, no question, and Jeff Bezos is doing a lot of things correctly, but it goes up and down. I mean, that's the bottom line. That's how stocks work. It doesn't matter how big a company you are. I mean, just look at Apple recently. That's become not such a great darling of the hedge fund industry anymore. It's more of a trading range. And that's what you have to be. You have to be flexible. Let's move on. So Amazon, lowest close in 3 months, a loss on the month of, I think we talked about over 13%, depending where we close today, of course, but not a good thing for Amazon. Contrary to that, Barrick Gold. We've been talking about the gold market for some time now. Barrick Gold is up 34% for the month. This is the highest we've seen Barrick Gold in about 6 months, and this is going to be the highest close we've seen in Barrick Gold certainly in 6 months. So let's see how that plays out, but we're getting close to an area where it should begin to find resistance, which is right around these levels here. We outlined that yesterday. A Fibonacci retracement should be looked at, but nonetheless, stronger trends in gold right now. This is crude oil. Crude oil is closing down for the month. We're down 14%. This is the March contract, so nothing to report there. The trends are still, major trends still down, but it's down. So you should be out of the market right now. But nonetheless, it's the nice signal we have is 46.64 on the weekly for a downtrend. So you can see that's worked out very well for us. But we're very oversold, but you can see the resistance coming in at 50. I don't think that's going to be taken out anytime soon. This is the Dow, where you can see we had a monthly signal and a weekly signal, and it's basically saying the trend is clearly down, and we're looking for this market to go lower. But you can see this is the key level right here, this low, this where we opened here, and that would be, I would say, probably around the 16,500 level. That would be a key level for it to hold on the opening, but it's down for the month, and that's incredibly important to look at. We're down almost 7%, 6.5% right now, depending on where we close, but nonetheless, not a good month. And remember the January barometer, we talked about that in the S&P 500. So goes January, so goes the rest of the year. So I think that's going to be on a lot of people's minds this weekend when they get home and look at their charts. This is gold. Gold has actually put in a good performance. We're up 5.25%. This is going to be the best move we've seen in gold for quite some time. And a lot of people still don't believe it, but it looks like it's trying to turn around. And certainly if we put a trend line in this, let's just do on a close-only basis, and we take a trend line right here, and we draw from here down to here. You can see we've actually just broken over this line, depending where we close today. But if we close a little bit over, that'll be the first time we've actually seen that line broken. There's the 1, 2, 3 points right there, and you can see it's broken to the upside. This is Microsoft. Had a big looked good into the report. Let's just put a chart on here. You can see it's actually doing very well. Nonetheless, I'm a little concerned about the divergence here we have on the RSI on the monthly. I would be a little cautious with Microsoft right now. This is the NASDAQ. You can see, I'm going to get closer in on this. Let's just do a 5-year chart. Actually, even a 2-year chart. You can see we're down dramatically for the month on NASDAQ. We're down almost 10%, 9.2% right now in NASDAQ. Not a good sign. And this is going to be the lowest close we've seen in NASDAQ in quite some time. So I would not be enthusiastic about jumping in front of this or trying to catch a falling knife in this case. This is the Eurodollar. The Eurodollar is actually kind of flat for the month. We're 0.29% either way, so not a big deal on that one. So this is the market they use for the barometer effect, the January barometer effect, and you can see we're down. That's the takeaway, I think, for the month. I think I have to see how we work out next week. I think we'll see maybe some more recovery here, but nonetheless, it's going to run into a brick wall. I can't imagine this market's going up, especially with all the efforts that are going around the world with the Japanese banks going to negative interest rates. There's not a lot the ECB nor the Fed can do now. They've played all their tricks, and I think we just have to let really what's going to drive the markets higher is economic growth, and we're not seeing that at all, both in Europe and Asia and here in the States. Have a great weekend, everyone, and I'll be back on Monday. We'll be talking about some other markets then. Take care. Thanks for watching.